Hey, welcome back to The Dive. Today on the show, we have a dive favorite, Craig Hemke from TF Metals Report. But before we bring Craig on, I'm just going to quickly remind you to tap on that subscribe button, please. Hey, Craig, welcome back to The Dive.
Hey, Cassandra, always nice to see you.
You too. Okay, so let's begin with silver. According to reports, there is a significant shortage of actual silver on the market right now. What do you believe this will mean for the silver market?
Well, some would say there's been a shortage for years, a supply deficit, what actually gets mined and what gets recycled versus what gets used up industrially and what gets, turned into bullion and coins and the like. I mean, the whole entire world only mines something like 850 million ounces, right? And you throw on the recycling, I don't know, we'll add that up and just make round numbers of 150 million ounces. And so you get a billion ounces. That's not entirely accurate, but let's just use that as an example. Then you've got generally about 600 million ounces a year that gets chewed up in industrial technological demand, which then leaves 350, 400 million ounces for investment demand. And whenever you exceed that, you've got a supply deficit. And we're certainly on pace for that this year. But that doesn't matter. We haven't priced precious metal off of just physical supply and demand since 1968 or 1974. The price is now determined through the trading of these futures contracts, which don't really amount to anything. So I might as well be trading baseball cards. It's like we're recording this here on the 7th this morning, just after the London PM fix, which is the 2 times a day that the London markets fix a price that's used then as the wholesale benchmark until the next fix. Just after that PM fix, which will be the wholesale price now for the next 17 hours, actually 19 hours, sorry. Price suddenly gets bombed on the COMEX. And there was about 15,000 COMEX gold contracts that were traded inside of 4 minutes. Well, that's 1.5 million ounces. That's almost 50,000 metric tons. Not a physical metal that got traded, just these contracts, these derivative contracts where nobody ever stands for delivery. What do they amount to? Nothing. And so, we talk about silver and supply and demand and all that stuff. And yeah, maybe eventually that kind of trickles through into price. But more importantly is the supply and demand derivative contracts. And that continues to be what actually is allowed to set price. And so we'll watch physical demand. And if we can run a supply deficit, then it also, that eventually hopefully ripples through and impacts price. But in the short term, it doesn't really do a lot.
So silver opportunities are starting to come out in the form of ETFs. Do you think the price of ETFs is significantly correlated to the price of silver?
Yeah, it's definitely correlated. The ETFs seem to move in tandem with price. And because of that, anybody that buys those things has to understand that's really all they're getting is an exposure to price. So if you want to day trade, maybe you want to buy, kind of traditional listed options, then that you can use those for that. But no one anywhere should be under any illusions that if they own the SLV or the GLD, that they actually own physical metal. You don't. The only parties that have access to withdrawing metal from those popular ETFs are what are called authorized participant banks. And those are the big bullion banks that operate out of New York and London. They are the ones, this is all just in the prospectus. They're the ones that can cobble together baskets of shares and exchange them for metal. They're also the ones that can put metal in. But it's only them. Okay, so Cassandra, if you or I own 100 shares of the GLD, it doesn't mean we can show up and ask for the equivalent amount of gold. Nothing could be further from the truth. And so if you own the GLD or the SLV, not you, but somebody listening to us, understand you just simply have exposure price. It's going to go up and down with that COMEX price. But if you don't own physical metal, you want physical metal, you got to actually go online or go down to your local coin shop and get your hands on
So, Craig, you mentioned in our February interview that gold will hit $2,300 this year. Do you
Mm-hmm.
believe this is feasible at this time?
It's certainly still feasible. What's aggravating about, putting out annual forecasts, which I like to do, is preface them with saying, you get it right, like I have the previous couple of years, you get like, oh, well, hey, anybody could have seen that coming. You're not special. And then when it goes wrong, everybody says, look, you were said this. No, I'll wear that one. I thought I based $2,300 on an expectation that real interest rates in the US would go to -2%, where inflation goes to 3.5 and the 10-year note is at 1.5, and that's -2. Well, heck, I mean, we're actually -4. And gold has continued to go down rather than up. And it seems as if the markets in general, with hedge funds or institutions or whatever, the people that buy the futures contracts, they seem convinced that this transitory thing from the Fed is actually true. That inflation is going to come, screaming back down. Then they were going to have positive real interest rates again, and so nobody wants gold in at least in terms of futures contracts or ETFs or anything like that. And price keeps going down. So that's how I thought we'd get to 2,300 this year. And obviously, as we record this early September, I've been dead wrong. I mean, we began the year at 1,900 and we're right around 1,800. The only thing I would add is that this can change pretty quick. Precedent has shown as recently as last year. I mean, gold was breaking down through 1680 support on June the 5th of 2020. And by August the 5th, it was near 2080. So it moved from 1680 to 2080, 25% in 2 months. Okay. Silver was even more dramatic. I mean, it went from below 20 to slightly over 30 in 3 weeks last summer, in the summer of 2020. So do I still think we can get to 2,300? Yeah. I mean, that precedent would say yes. I mean, you just got to get people to wake up and realize that it's impossible for the Fed to completely eliminate QE. It's impossible for the Fed to allow interest rates to go higher. It's impossible for the Fed to step away from monetizing the US debt. And that inflation, or more importantly, stagflation, is the expected result that we're seeing. And when everybody figures that out all at once, you get these really fast moves like we had in 2020. So I know why I thought we'd have good prices this year. I know why we haven't, but we're not done yet. There's still a third of the year to go.
Yeah, we'll just have to wait and see. Okay,
Yeah.
so Treasury yields increased despite last week's disappointing jobs data. What statistics do you think the Fed is following? And do you think we will see any rate hikes?
Well, Powell made it pretty clear in his speech at Jackson Hole, which is now a couple, 10, 12 days ago, that whether there was going to be any kind of taper schedule was going to be what he calls dependent upon substantial further progress in the economy. And he, explicitly stated in his text, which anybody can go, to the Fed's website and read it for yourself, that they're going to be watching the data very closely going forward. And so the data comes, meaning particularly the employment report. Well, the employment report comes out on Friday with massive miss. 250,000 jobs where they're expecting, more than 800,000. So it came in at, 30% of what they thought. And so that would initially think, you think, okay, that means the Fed is, their tapers off the, off the screen, off the table, and gold rallied and silver rallied. But the bond market sold off. And I think the bond market's looking at it as saying, I don't know, you don't want to get to interpret too much on a daily basis, but the bond market's up. I mean, the interest rate on the 10-year note's up 0.1%, 10 basis points since Friday. So the bond market is now expecting, the higher inflation that is coming, that is present. We had a big jump in average hourly earnings as part of that report back on Friday. And so the bond market's saying, well, look, here comes, the inflation's not going away. And so it's selling off. The dollar index, which is rather perverse to look at it this way, the dollar thinks, oh, look, higher interest rates in the US. Buy the dollar. Okay. And so those two factors put together have completely reversed gold and silver as we record this on Tuesday the 7th. Um,
Hmm.
so we'll see. It's going to be a really interesting remainder of this week to see if this is just a 1 day move in the dollar, and to see if the bond market rallies back. But it's going to be particularly interesting as we get closer to that next FOMC meeting, which concludes on the 22nd. So 2 weeks from Wednesday. That's going to be the next big event.
Absolutely. Okay, so we have to ask what's going on in the news with coronavirus. Reports have recently come out showing the US may have funded research related to coronavirus through Eco Alliance, which is a non-government organization. And then we also have the media seemingly attacking Joe Rogan over ivermectin. Can we get your thoughts on everything that's going on right now?
Cassandra, it's just so dishonest. Um, it's really troubling. You know, backing up to this thing about Fauci and that guy Dazak, who they work hand in hand on this gain of function research at the Wuhan Virology Lab, and they've been in full CYA mode ever since the virus first escaped in early 2020. They've been hey, we've got the emails now. We've got this, as you referenced, this Freedom of Information Act information, and they're just in CYA. They're doing everything they can to deflect. Oh no, that couldn't possibly be happening. You don't know what you're talking about. The only one lying in front of Congress is you, Senator Paul. That kind of stuff. And what's unfortunate is that the media, rather than actually seek the truth, because we're all adults, we can handle the truth, right? Um,
Hmm.
they instead want to kind of cover up and drive a narrative. Look, it was decided months and months ago now, 18 months ago, that the way that governments around the world were going to handle this was with a vaccine. And
Hmm.
so anything that threatens that gets pushed aside. You mentioned ivermectin. Ivermectin is a Nobel Prize winning drug. I credit it with curing my COVID last December. I don't have any doubt in my mind that the ivermectin I took cured my COVID, and the data shows it. The data has been collected now. It's very helpful therapeutic, but it can't be allowed to get traction. Some people say because there's no profit in it. Well, let's go back even further. Um, I my my daughter's studying to be an epidemiologist, and one of her books she has to read this semester is called, what's it called? I'm trying to remember what it was called now. Virus or whatever it is. It was written 20 years ago, and it was about um, the Spanish flu. But there's a whole chapter in there about the swine flu of the late 1970s, which you're not old enough to remember this, but I was alive back then. And this was a big, huge, terrible fear. And they came up with a swine flu vaccine in the mid to late 1970s. And President Ford said, everybody's got to take this vaccine. And they started giving this vaccine out to people, and people started dying and getting the same
Hmm.
Guillain-Barré, whatever that is, syndrome that they're getting now from the COVID vaccine. And logically, back then, the media went crazy, and they had to
Hmm.
stop doing it. And then there was this laundry list of litigation against the companies that made the vaccine. Okay. Well, fast forward 40 years, they did the same thing. However, this time, to fight it with the vaccine, they came up with this emergency use authorization. And the only way that the makers of the vaccine can avoid the litigation that would come from all these deaths is through that emergency use authorization. And to have the emergency use authorization, you can't have any other therapeutics.
Hmm.
So they have to talk down ivermectin or anything else that might, cure or work as a therapeutic, so that the makers of the vaccine can continue to get their defense against lawsuits. Okay, and
Hmm.
that's all because they decided 18 months ago that the vaccine was the way they had to go. So that's how I think all these pieces fit together. And I hope, my only hope, I guess, is that in time that it becomes clear that the vaccine itself is really only a therapeutic, and that the world moves from vaccine passports to um, antibody protection kind of passports or immunity passports. Depending on how you get it, we have to move it. You got some protection against this virus. I don't know if we're ever going to get there, though. God, what's going on in Australia, New Zealand, Canada now is certainly dispiriting. And I can't imagine this news today is going to get any coverage at all in the U.S. About Fauci and his cohorts. We'll see, but it's all
Hmm.
really distressing, no doubt.
Yeah, it's scary. All right. Well, thank you so much for joining us today again, Craig, and sharing your thoughts with us.
Cassandra, it's always good to see you. Thanks for having me on.
Thanks so much for tuning in. We'll be back again tomorrow with more great content. But in the meantime, don't forget to like, subscribe, and share.